This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And let's start first by looking at the corn market. Corn has been really a kind of a stick in the mud here today. We've been treading water in the upper ends of the resistance pocket, 380 to 383. This is previous support, now becomes resistance. The inability to get out above here with some conviction over the past couple sessions is a little bit concerning, and I think you're seeing that reflected in prices as we retreat a little bit lower. 375 is the must-hold line in the sand for the bull camp. A break and close below here, and we wouldn't be surprised to see some accelerated selling come into the market. Take us a little closer to those lows at 365 3/4. That was the contract lows. Exports have been dismal as of late. We saw that again in this morning's report. We expect to see that start to pick up, hopefully by the turn of the year, and that could potentially give us a longer-term positive outlook. But right here, right now, not a whole lot to get excited about, whether you're a bull or a bear. Now, moving over to the soybean market, soybeans have been very optimistic here over the past couple of sessions. We talked about 865 to 870. Those August and September lows is significant support here earlier in the week. That was tested and held basically to a T. So we're seeing a relief rally here, working a little closer to 890. 890 to 895 is the pocket that we're looking at. This represents previous trendline support, now becomes trendline resistance, as well as the 50% retracement from the contract lows to the recent highs. This is going to be a brick wall. If the bulls can't achieve consecutive closes out above this pocket, this rally will be relief in just that and probably be sold into. So that's going to be a big pocket to keep a close eye on as we round out this week's trade. Now, on the meal side, something we don't talk about a lot, the soybean meal leading the way. And there's a nice seasonal that started earlier this week, buying on December 2nd, selling on December 28th. That's been profitable for 12 out of the last 15 years, with the average profit being about $1,150 there. So something to keep a close eye on here as we start this month of December's trading. Wrapping things up with the wheat market, Chicago really not optimistic here on a lot more upside in the mid $5 handle. 529 to 530 is the immediate pivot pocket that we're looking at. If the bulls can't retain and regain ground above here with some conviction, I wouldn't be surprised to see sellers step in and take us a little closer to 515, which is a 50% retracement from those July highs to the contract lows in September. We think that if you want to be long wheat, Kansas City contracts where you're going to find the value, and there's a lot of support. 430 to 433, the 50 100-day moving average, as well as trendline support from those September lows, those contract lows at 397. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.